Very good evening to you. Welcome to the Trading Bell. I'm Noah Kipkimboy. And today we are focusing on the real estate sector. We look in Kenya, the projections, the population under which we are. We are a fairly young nation. And all these people will need housing in one way or another. And this housing has to be funded. That's why people developing alternative modes of funding real estate is very critical for us to look into, and that's why today we'll be having Acorn Holding into the building. To be specific, I'll be having a chat with Raghav Gandhi, who is the Chief Investment Officer of Acorn Holdings and also the MD, Acorn Investment Management Limited. Before we do much, let's take a look at his profile.
Raghav is an experienced real estate professional with a proven track record of delivering results globally across various asset classes. He has jointly led the growth of a major commercial real estate startup venture in India and headed the development of projects across the MENA region for a real estate developer headquartered in Kuwait, where he was also responsible for optimizing returns from a number of underperforming investments. He subsequently established his own consulting practice, which advised GCC families and corporates on real estate transactions and projects in the UK and in the Middle East. Raghav joined Acorn in February 2020 as a consultant for the implementation of the Acorn rates, working closely with the corporate finance and corporate affairs legal teams, as well as with transaction advisors, service providers and investors. Effective 1st November 2020, Raghav was appointed as Chief Investment Officer. Raghav holds an MBA from the Wharton School, University of Pennsylvania, and a Bachelor of Sciences in Economics from the London School of Economics.
All right. Mr. Gandhi is here with me. Good to see you, sir.
Good morning, Noah.
All right. So, to start us off, I mean, when you talk about Acorn,
Right.
in our local setup, is synonymous with student housing.
Right.
Yeah, and that is sort of the key entrance into the market the way we understand you. Bring us to that. What does the company do in brief, and why student housing?
Yeah, sure. So Acorn's strategic focus is for the provision of safe, secure, and affordable rental housing for the young people of Nairobi, Kenya, and even beyond in the future, perhaps even across the East Africa region. We started, as you've identified, in student accommodation, purpose-built student accommodation, which globally is an established asset class. But here, what you find is that student accommodation is typically provided by, on an ad hoc basis, right? High net worth individuals might have a building that they have available, or a kind of a small house that they decide to rent out to students. But what we're doing is providing an institutional grade service, institutional grade accommodation for students, so that they feel, and their parents feel, that they're in a safe and secure residence.
Definitely.
So that's what we do.
I mean, what is the demand vis-a-vis the supply as we speak right now in that space of student accommodation?
Well, if you think about it, I mean, Kenya right now has about 550,000 students, right, across the country. Given that essentially it's one of the, I would say, education hub for the region in terms of the number of universities and the quality of the universities that are here. But if we look at the type of accommodation that is provided, you either have the universities themselves providing accommodation on campus, but that's insufficient. I mean, I think the numbers range from anywhere between 150 to 200,000, and then you've got these ad hoc opportunities or options available outside of the university, but those aren't necessarily providing security that we focus on. So for us, really, we're the first institutional provider, or the first organization that is actually providing purpose-built student accommodation at scale. And for now, there's no one else in the market, but we hope that others do enter, because we do feel that there's clearly an inherent gap between what the demand is and what we're providing.
Definitely. That is very important to note. You say in established markets, this is a proper asset class that people put their money into. But here we are just developing.
Yeah.
In terms of setting those foundations, because sometimes you can build your house on sand and it develops so fast. But looking at the student accommodation sector to be specific, what are those critical elements that we have to set up in the market for it? Maybe in the next 5, 20, 30 years, we are able to have even a more vibrant market for it.
Well, I mean, first of all, you've referred to kind of built on sand. The one thing I will say is that actually our business model is based around robust statistical market research. So we actually had an independent firm come here about 6 years ago now, do extensive analysis on what the addressable market was for what we offer. So, it was based on quantitative analysis where thousands of students were interviewed and then further developed through focus groups. So you kind of do about 10, 15 focus groups, each focus group with about 12 to 14 people on average, and you ask them specifics with respect to the product offering that could be conceptualized, and that's what really enabled us to come up with the 2 product offerings that we have, Kwetu and Kijani. So what our market research indicated that currently, as of now, the addressable market for us is about 110,000 beds, 110,000 students. So it's not really, kind of so speculative. But I think what's important, to the other part of your question, which was what are the elements that go into this? I mean, it's kind of, for us, the focus has been on providing a community. So we don't just look at this as bricks and mortar, right? The traditional form of real estate. Because we own the buildings and then we are, renting out, the environment that we're providing is equally critical to us, right? Because that means that, like I said, I mean, I can't maybe, talk about this too much, but safety and security is very critical for us. But aside from that, you've got to have a certain level of cleanliness, a certain level of housekeeping that ensures that you're providing the residents with a clean environment. Aside from that, what we do a lot of work on is what I touched upon, community development. So we have student representatives, community representatives who are out there, understanding what the students are thinking about, how they're feeling about where they're living. And then on top of that, also looking at, hey, look, how can we get together? What other types of events, what other types of gatherings, what are the other services that we can be providing in order to build up that community environment? Because that's actually what makes your demand sticky. Right?
Yes.
If people feel like they're part of a community which is associated to that building, they're there with their friends, they're there with their like-minded peers, that's what will make them stick around. Otherwise, they'll be there for 2 months and then it'll be like, okay, time to leave.
Definitely.
Yeah.
And all this needs funding.
Right.
Now, for an individual, you've touched on the element of student accommodation. Traditionally, is high net worth individuals. Somebody has a building, and rents it out to the students. Yeah.
Right.
Looking now of the issue of real estate investment trust. Yeah. I think that is quite a unit that enables people to participate in the real estate market without necessarily going through the loopholes of putting up a building, because I know that is quite a lot. Maybe bring us up to date, understanding the role of rates and why they are important.
Yeah, no, very good question. So look, REITs, as in real estate investment trusts, are investment vehicles that are structured in order to be able to grow a platform centered around rental real estate, typically, right? So any form of rental real estate, whether it be rental housing or office space which is rented out, or malls, is typically what we see globally kept in REITs, because that enables investors to come in and take that participation interest, and also it provides a platform that can scale up as well. And that was important to us because currently we're providing about 4,000 beds, but I told you that the addressable market for us is 110,000 beds. Now, any organization in itself is limited by one major resource, which is capital, right? If you want to grow the platform, if you feel that there is that sustainable demand for what you're offering, then you really need to source external capital. And that is the reason that it was important for us to establish these two real estate investment trusts that we did last year. One is a development REIT, which is the first development REIT globally, actually. So quite a unique milestone for Kenya, I would say. And then the other is an income REIT.
Yeah, definitely. In fact, go into that, the development REIT, and talk to us also in relation to the income REIT. How do they correlate and play or work together?
Yeah, fantastic. So, I mean, the reason for setting up these two REITs together concurrently was that we essentially created like a sustainable financing cycle, right? So what the development REIT does is the development REIT acquires land and constructs a building as per our typical templates that we have, and then also looks to operationalize it and stabilize it going forward, right? So the development REIT's role is kind of, you would say, in the first half of our typical purpose-built student accommodation life cycle, which is the acquisition land, construction, and then the initial operationalization. Once a property is stabilized, so once a building is constructed and we've stabilized the occupancy, then we look to transfer that into the income REIT. So the income REIT's role is to only hold stabilized operational assets. So what that means is that it gives investors like a coupon, like in what many of your viewers would be familiar with, like fixed income. But fixed income that is centered around real estate. It's predictable, it's a consistent return based on the rental income that is generated, right? And so from that transaction that takes place between the D-REIT to the I-REIT obviously pays a transaction consideration to the development REIT, and from that money that the development REIT receives, it is then able to take on further developments and carry on building more projects.
You've touched on the issue of, affordable housing, and this is one of the big four agendas even when you talk of our government.
Yes.
I mean, looking at our conceptualization of affordable housing from somebody who has been in the real estate sector, has it been right? Because I see a sense of we are building houses for people to own.
Right.
And looking at the average age of a young Kenyan person who's below 35 years, those are not people who buy houses majorly. So when we think about affordable housing, should we change our mind and have a different approach to it?
Well, we're big believers in that, and you've touched upon it yourself. I'm sure, Noah, if you were to think about what your priorities are right now in life, you don't want to take on this big liability of owning a house and taking care of mortgage payments and so forth at your age. You'd rather be experiencing life a lot more, right? And so like I said, we're big believers that affordable housing should be centered around rental real estate, because if we look globally, even this transition has been taking place for a while now. Germany has about 70 to 75% of its population that rent real estate, right? I mean, that's a stark number, and yet, in emerging markets where the affordability quotient is lower, we try to conceptualize this program that in order to give people affordable housing, they have to acquire that house, which you haven't been able to accumulate enough of an equity to be able to contribute to the down payment of acquiring a house. Yes. Like I said, the mortgage market, I mean, even if, first of all, you have to be able to access a mortgage, and the mortgage market is not deep enough. Once you are able to access it, you're paying a high level of interest. I just feel that there's a disconnect there, and so we're big believers that affordable housing has to be in the form of rental real estate.
Definitely. Let's take a look at the investors into the real estate investment trust. I mean, for the longest time, we've seen, big players, institutional investors, and where there is scale, we see it's in the retail sector. If I can get 100,000 from you and from my cameraman there, and you scale that out, you can easily get a huge pool. In terms of devolving and diversifying, bringing down these investment options to retail players.
Yeah.
What have you guys done?
Yeah, great question. Actually, what we did last year, again, under the guidance of the Capital Markets Authority, we introduced a new product, a little bit of an innovation that we put together called VUCA, which is a retail investor aggregator platform. Because the thing is, with the two REITs that we've launched, they're actually unlisted, which means that they're typically only allowable from an investment perspective by sophisticated institutional investors. But when we launched them, we found a number of individuals saying to us, "Hey, we'd like to participate in this, right? We'd like to be able to say that we own equity property, right? Which was one of the points that you earlier made, which is that giving access to, an everyday individual, right? So what we did was we put together VUCA, which is currently part of the Sandbox program under the CMA, which allows for innovation, and it's an aggregator that brings in retail investors with small investment amounts. They can invest as little as about 4,500 shillings a month, and be able to pool all those investments to then invest in the Acorn student accommodation income REIT. So that's what we've put together, and it's been a great success. I mean, we've already got about 800 members that have come through, and it's something that we'll continue to grow, because we think, just like you said, the greatest potential of the capital markets, which then fuels the economy overall, is the base is retail investors.
So how do we boost that? How do we boost uptake? Of course, factoring in mind what has just happened with the pandemic,
right,
and the impact it's had even on players who we're expecting to be part of the retail.
Right.
People are a little bit conservative.
Yeah.
Their money looking at safer investment options.
Yeah.
How do we grow that base?
Well, I mean, you raised a good point. Look, the fact is that in order for people to develop their own financial freedom, for people to accumulate their wealth for the future, maybe even working towards retirement, they need to be working towards that now, right? They need to be saving and investing now. And that's why what we recommend as far as VUCA is concerned is that you only invest, typically, let's say about 10% of your savings, or of your salary, 10% of your salary every month, and you allocate that so that it gets parked away, right? You're not just keeping it under your mattress where it's not really going to grow, right? Inflation is going to take the value away for that. You're putting it somewhere where it's going to continue to grow, and bit by bit. To your point about, people are risk averse, they're just coming out of the pandemic. That's why VUCA investors only go into the Acorn Student Accommodation iREIT, which is that, investment vehicle based around steady state operational assets that are giving you a consistent, predictable coupon payment, so to speak, that rental income. So there's, the level of risk has been significantly minimized by them only having the option to invest in the income REIT.
Okay.
Yeah.
Very, very important to know that. We want to take a segue, because also when you talk about Acorn, it's very synonymous with green bond,
right,
in our local market. That was quite unique.
Yeah.
For starters, I mean, investors are very keen these days. Everyone wants to invest in something that is sustainable, environment friendly, and you guys offer that opportunity. Maybe talk to us the journey that motivated the green bond move.
Yeah, I mean, I think the journey that motivated the green bond move is the fact that a couple of things, I would say. One is that, as responsible citizens of the world, I think there's a wide recognition that, the climate is something that we need to be looking after. Obviously, with the growth that the world has seen over the last, 100 years, that has brought with it certain negative externalities, such as the warming of the climate, the warming up of the climate, and that's something that is going to continue to have an impact. It's not just now. We also have to think about the future generations. And so for us, like I said, being responsible citizens, we wanted to consider what we can do in terms of how we minimize our carbon footprint through our business model. All our properties are actually green certified. They're certified by an organization called IFC. We have an IFC Edge certification for our projects and properties, which is a testament to that minimization of carbon footprint, and that's something that we're going to keep on striving for. The other aspect, I said there were two elements to why we have looked at this, and the other aspect is that ultimately there are other responsible citizens in the world, right? Other people who care about this. And what you're finding with a lot of investors, institutional investors, whether local or global, across the board, for them, sustainable investing is going to become an increasingly important part of their agenda. Yes. And given that we want to continue growing our platform, in order for us to be able to do that, we have to show other investors our commitment to that cause.
Definitely. We already half a year into 2022.
Right.
Q1 for the year, I'm pretty sure you guys have the numbers. For Q2, I'm not sure. But so far, since the country and the world at large is on recovery mode, for your segment of the business, how has been performance for these first 6 months?
First 6 months, look, I think we've been very encouraged. I think coming out of a pandemic, one would think that that's pretty much the low point. Things couldn't have got worse, and there has been a recovery. We're very happy with the occupancy our properties are showing. Typically, they're about over 90% occupancy, which points to that fundamental demand that exists. We're about to announce our interim results, and I think we'll be we'll deliver good results. We'll be announcing an interim dividend in that as well. Of course, what has impacted us, and there's always something that not everything can be a bed of roses. What has impacted us is the war in Ukraine. That has obviously led to supply chain disruptions. There's been significant escalation in terms of commodity prices, but again, that's why we get paid to do what we do. Our role is to ensure that we do our work and we value engineer to minimize that cost impact. So that's something that we're working towards, and I think we'll have everything under control.
Definitely. In fact, I was just coming as we close up the projections of the market, looking at where we are right now, looking into the future. Apart from some of these out of control factors like Russia-Ukraine situation, what do you think will shape the real estate market here in Kenya in the next few years?
I think, look, a lot of it is going to be predicated with or by the inflationary environment that we're seeing. I think also what happens with interest rates. But overall, I'm generally optimistic. I'm positive. I think one has to be when one's in business. Hopefully there's a resolution to the war. After the pandemic, everyone was, I think, itching to get back into a swing of things, right? They wanted to recover, not just for themselves, but also for business. And I do think that over the long term, there's going to be a pickup in real estate. There's underlying gap in housing that we've spoken about. So that presents an opportunity for real estate developers. Aside from that, there are opportunities in industrial real estate, logistics, warehousing, so forth. And right now, as far as the office real estate sector is concerned, everyone's a bit in the doldrums because they think, work from home, hybrid working, this and that. I think you'll probably see a shakeup that will present other opportunities in the next couple of years. So that's also something I think people should look out for.
Lovely. Thank you very much.
Right.
Raghav, Gandhi, Chief Investment Officer, Acorn Holdings, and also Managing Director, Acorn Investment Management Limited, showing us what exactly is happening in the real estate sector. And one of the interesting takeaways is actually for you as an individual investor, you can put your money into these projects, of course, for long-term purposes, but it's a good place to, stack your money, get returns from it in a very safe and nice way, slow but easy. That's how we build wealth at the end of the day, at the same time building the economy and the real estate sector. Well, that said, I'll have to put a full stop to this conversation. My name is Nairobi Securities Exchange, but before I go, here are the markets.